All right, y'all, back to work. We got one more day left this week. It's been a fantastic week so far. And I'll tell you, this big move higher we saw this afternoon, it tells us exactly where the best entries are going to be for tomorrow, because anytime we see these big kind of grindy moves we saw this afternoon, there are three types of entry tactics I look for the following day. And to be honest, the first two are really simple. There's a good chance we'll get one of those two tomorrow. We're going to cover that in tonight's video. But most importantly, though, I want to talk about that third entry tactic because it's a bit more advanced. It can be a curveball. We've had a great week so far. I want to make sure we finish strong and not give back all our gains this week. So we'll cover entries, we'll cover exits, we'll cover some variations in case things get crazy tomorrow as well. So this will be a fantastic video, start to finish. So buckle up, take lots of notes and screenshots. Charts are ready. Enough of the intro. Let's dive in and finish up what's been a remarkable week so far. The E-mini SPY ready to go tonight. Nasdaq triple Qs are ready. I got 4 clues on the charts that are telling us where the money is made tomorrow. The first of 4 clues right now is on the hourly time frame. Remember, I like to use the hourly chart as a directional filter. And boy, that range rotation we've talked about all week this week in the S&P SPY. We're definitely bullish overall right now on the S&P SPY, and that beautiful channel we talked about in last night's video on the Nasdaq triple Qs. Yeah, there's no doubt, right? We're definitely bullish overall. Nasdaq triple Qs, bullish overall on the E-mini and the SPY. We're bullish. We're also way high up right now. That's one really big clue here on the hourly time frame. The second of 4 clues for tomorrow is over on the calendar for tomorrow. There's 3 things on my radar for tomorrow. First thing's consumer sentiment number at 10 o'clock Eastern time, specifically that inflation expectation aspect of that number tomorrow that has been a market mover over the past few months. So be aware of that tomorrow. We call that the 10 o'clock shock in our morning trade room. So be aware of that. And also be aware, our Treasury Secretary, Scott Bessent, love that guy. He's in Tokyo right now at the World Fair in Tokyo. And you know, Japan is one of those final few countries we're trying to get a trade deal from. So I wouldn't be surprised if we hear some good news out of Tokyo at some point overnight, tomorrow morning. That's definitely a known unknown. That could really shake things up tomorrow morning. And the final thing, I want to remind you guys, I'm on vacation next week. Our next video newsletter is all the way on the 28th of July. So off next week, back the 28th. I will miss you all next week, but it is the summertime season after all. So consumer sentiment at 10 o'clock Eastern time. Will Scott Bessent, will he seal the deal in Tokyo? And again, off next week here. Back to our charts though, because it's good to know when the news is, but the money is made on the charts. Now let's dive into some tick charts right now. The third and fourth clues. Remember, we trade tick charts in our trade room. We don't trade time charts. Tick charts make entry timing a whole lot easier. And of course, this is a 7,000 tick chart. In case you're wondering, all the time frames, upper left-hand corner. And that yellow line right there, by the way, it's the only indicator we need. It is the 21 EMA. There's a couple really big clues here on this tick chart right now. The first big clue is that really big move today and this afternoon. Now, big moves. What do big moves tell us? Well, we don't want to buy high. I want to buy low. And so ideally, I want to buy a nice deep pullback after a big move up like that. That's one big clue, and arguably one of my favorite clues for tomorrow. You probably see this one already. It's that cute little trading range right there. Now, why is that a big clue? Because, well, as we've talked about all week this week, that range we saw, we talked about that in last night's video. What happens to ranges? Ranges love to rotate, don't they? The amount below, the amount above. And so we saw that coming a mile away today, didn't we? So that range, if we're lucky enough to get that nice deep pullback, we now know where to project those big targets up overhead. And don't forget too, that knife cuts both ways, right? We go up and then back down from there, the amount above, the amount below, the same techniques I teach in the free video classes. So let's put all of these clues together. I mentioned in the introduction here this evening that there are 3 different types of setups or entry tactics I look for whenever we see these big kind of grindy moves here. And I said earlier, the first 2 out of these are pretty easy. Most folks will learn them and we'll probably get at least one of those at some point tomorrow. But that third one, I'm telling you right now, that third one, we need to be mentally ready for that tomorrow. I'm going to cover that a bit later on in the video. I don't want us to give back all these gains so far this week here. So let's cover the first 2 right now. And if you like making money, make sure you watch all the way to the end for that third one, that curveball, all at the end. So bottom line is, anytime we see a big move like this, the most important thing is I'm looking for a 2-legged pullback. Think about a measured move, A, B, C, D, or even a bit deeper than that, right? With this trading range right here, we may not get that deep 2-legged pullback. We may only get a 1-legged pullback. Now, 1-legged pullbacks are fine, but I'm way high up right now on the hourly time frame. So one of the 2 strategies or setups for tomorrow is a shallow pullback or a 1-legged pullback. A 1-legged pullback, I'm concerned about buying too high. To time the entries, I'm looking for what's basically called a technical bear trap. It basically means trap the bears in once, let them try twice, and I want to get in underneath these lows. Again, the trick to this is I have to let these sellers try a couple times. They're going to try to get that 2-legged pullback. So I can't be too aggressive on a shallow pullback. Let them try once, let them try twice. The most important thing right now is I need to get in below a prior swing. And then remember, the amount below the range, the amount above the range, that's where our final target goes for that rotation on the opposite side. So a shallow pullback is a technical trap like I teach in our free video classes. The dream scenario, this is the second scenario now. The dream one now is a 1-leg and a 2-legged pullback. Now a 2-legged pullback, much easier because now I can risk small to earn much larger. I can be a lot more aggressive on a 2-legged pullback. In this situation, all I need is kind of your typical classical bear trap. Bears try once, higher high, bears try twice. Now on this one, I can buy right into the stops of those sellers. Right? Imagine a deep pullback. Rookies confuse this with some reversal. We're so high up right now, it's probably not a reversal. So when I see bears try twice, I know where their stops are and I can squeeze those stops. Now, there's one small adjustment here. On a deeper pullback, now I can add to my winner. So once I get that bear trap and I buy into those stop losses, remember, don't just kick your feet back and watch the money pile up. Put some of that capital back to work here and look for the add-on. It's a bear trap and an add-on. And again, the amount below, the amount above, absolutely leave that runner. Bear trap and that add-on. On the add-on, remember, it needs to separate off that moving average. Separation equals strength. Now, I want to talk about one more curveball in this because oftentimes with those deep pullbacks, oftentimes we don't get that bear trap down there. I'm going to talk about that. We'll cover that third scenario in a moment. But before we do that though, let's slow down for a second because I know most guys watching right now, you guys know these patterns. You're making money with these already. But if you're tuning in for the first time right now, this might be a brand new strategy. Don't you worry though. I teach this entire roadmap in my free trading courses. In fact, I have a ton of examples of bear traps, add-ons, technical traps, classic traps. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So what I'll do is I'll put a little link up top here for you. Upper right-hand corner, hit that little link that popped up there. Take that free trading course because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. You'll laugh when you see how simple that technique is. More importantly though, remember, We make our money by timing good entries. So I want to teach you all my 4 favorite entry setups so you can time better entries, get your confidence back in your trading. Guys, if you're still missing the best entries each day, if you've lost your confidence in your current trading strategy, what are you waiting for right now? Pause that video, hit that link that popped up there, watch that free trading course. You're going to love all the trading examples I include in that short video series. The best part is it's completely free for you. Also be aware too, guys, I'm going to put all the important links you need below this video, in the description of this video. Start first with that free video course because most folks start making money all on their own, all from that free video class. So start there first. And by the way, too, if you're on the Twitter platform, the X platform, I post a ton of videos and charts and mindset stuff in between these YouTube videos. So give me a follow there. My handle's in the description there below. I think you'll love that Twitter feed, that X feed throughout the day here between these videos. So that is where you want to go to grab more information, learn the strategy. You're going to love that free video course. Everyone loves to get a lot of great feedback here on this YouTube channel. So where did we leave off? Okay, we talked about the first 2 out of 3 scenarios, right? The first one was a one-legged pullback, a shallow pullback. I want to get in underneath prior swings, right? That's the first one, okay? Second one was that deep 2-legged pullback. And again, do not be surprised if it goes a bit more than an A, B, C, D. I love this O2 area right there, by the way. That area to me is a really primo area because the prior week closes back there, big range from back there. I would love that area right there. And I talked about earlier how I'd like to go in and look for a bear trap, right? Now, this is not a technical bear trap. It's kind of a classic bear trap, right? Bears once, bears twice, and then adding to our winner as it rotates higher. But I mentioned earlier that sometimes we don't get that bear trap down there. In fact, a lot of times after big moves like this, we see a really nice, sharp 2-legged pullback. But instead of getting a bear trap down there, it just whoop and runs right back up again. These can be challenging, but here's the way I look at it. If we bounce hard off that low, we'll almost always begin to grind going higher. These are tough because that voice in your head, it will be telling you, get into this, you're missing it. But in my experience, you don't want to chase after these because often what happens is it'll hold the underbelly of that leg and they'll rip going lower more time. To do what we'll do is, I'm gonna mark a trend line off that high, mark that low, that finds my channel. And once those bears come in and try to defend the underbelly of that move, I'm looking for a bear trap right underneath that prior swing. These V bottoms, again, they can be difficult on the emotion. So promise me, if it V bottoms up there, do not let that voice in your head, don't let your emotions get the best of you. Have this game plan in mind here. It's always that first test off the low of that channel. What you're doing is you're letting those sellers, you're letting them commit, right? Let them shoot that thing lower. And then once you get that nice strong signal candle, like I teach in the free video course, now all their stops are sitting right up there and you can kind of feel them kind of panic, right? And it squeezes running higher here. We love those V bottom trades in our trade room. And then one last variation of this, and we'll go to the Nasdaq and we'll talk about that third kind of a curveball scenario for tomorrow. The final one is every once in a while on these big moves up, remember, it's July right now. Low volume, illiquid markets, we oftentimes see really big, sharp pullbacks that whether or not we get the bear trap down here or not, but oftentimes what happens is it'll spring back up, it'll hold the underbelly of that move, right? And it will make another leg going lower, okay? Now, here's the trick to these. First of all, this is not a reversal. Remember, the tick chart is not direction, okay? The tick chart is for entries. The 60-minute time frame, that's for direction. So remember, if this thing just makes a strong run down, again, whether or not we get the bear trap in there or not, okay? Oftentimes it will, they'll pop up and make another leg lower. This is not enough to be a full-blown reversal on that hourly time frame. Don't confuse this, all right? Remember that part about this. Now, a couple things here. The breakout leg going lower. That leg right there oftentimes completes a measured move. Okay, we call this the money zone in our trade room. So that measured move area between that low and that measured move area, right? This is where if you're not mentally prepared, you're going to get tricked into shorting down there, right? I did this all the time when I was a rookie. I call it the rope-a-dope, right? The rope-a-dope, because what happens is a lot of times rookies, right? Again, they trade the tick chart. They don't trade the overall direction, right? So this will feel very bearish down here. And I'll tell you right now, once we go back and retest that low, anybody who sells up here, they take their profit. They become buyers down here. So smart money, they're looking for bear traps down here. We call these retest trades in our trade room. We punch lower, we pop up, we retest. All the rookies pile in. It's once, it's twice, same thing. It's another bite at the apple. And guys, these retest trades are oftentimes our biggest winners, because what happens is everybody gets trapped, and we're so low down here now, it squeezes and rips right back up to retest the highs here. And remember, on the deeper pullbacks, don't just kick back and relax. Once you see that trade working for you, if you see that separation off that moving average, now you know, add to our winner. What I'll do is I'll take half off at the 1-to-1 and put that half back on, put it back on to work for me here on that add-on. And the target is, of course, back up to retest that high. Okay, retest trade. Strong run down, retest. It will feel like a reversal, but again, this is the tick charts. It's not the hourly time frame. Make sure you keep that in mind for tomorrow. Those are the two types of setups and some variations to be ready for tomorrow on the S&P. How about some Nasdaq right now? Nasdaq is very similar to the S&P in the sense that we're definitely bullish and we're way high up right now, right? Boy, we nailed that channel we talked about last night on the video, right? So nice, strong run going higher. There's a decent chance, by the way, on both the S&P and the Nasdaq that we wind up sticking in a range up here. Okay, this also goes for the S&P as well. So I would not be surprised if next week, unfortunately, when I'm on vacation next week, we get some big earnings next week. I wouldn't be surprised if we see a big range develop up there. So keep that in the back of your mind. Again, not just NASDAQ, but also S&P as well. So the NASDAQ chart right now, like the S&P, we're bullish and we're way, way, way high up right now. Now, I want to talk about the tick charts here in a moment here. Before we do that though, if you're enjoying this video, if you're having fun watching these videos right now, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. I know we're all busy people right now. I know it's summertime season. Kids are home from school right now. I appreciate you all tuning in and watching my videos. So as always, thank you so much for the likes, the subs, all the ongoing support. I feel the love in the comment section below. I appreciate each one of you guys tuning in and watching right now. I promise I'm done begging for likes and subs. Let's now drill down to our tick charts here. Again, tick charts. These are the entry tactics, right? Don't confuse these two time frames here. Big move up, right? Big move up into that trading range. You can easily see that range right there. And by the way, I love that range right there as well, right? Beautiful breakout pullback zone. If you watched last night's video, you know how breakout pullback zones work. So I mentioned earlier on the S&P, in these scenarios, I want to get that two-legged pullback. But again, we may not get that two-legged pullback. We may only get a one-legged pullback. On a one-legged pullback, it's the bear trap. It's getting in below prior swings. That's the most important thing right now because we're so high up on the chart. If I see a deeper two-legged pullback, it's that bear trap, it's that add-on, the same idea, the same variations, the same V-bottom, the same retest mentioned earlier on the S&P chart as well. Now, I promised you earlier, there's a third scenario that is oftentimes the more challenging one. And if we're not prepared for it, we're going to give back a lot of the gains we've made so far this week. It is July, right? This is not, this is a little bit different other parts of the year. July and August, they sometimes do things we don't normally get other times of the year. And one of them is a grinding move lower. For example, I'm looking for right now a deep pullback, a two-legged pullback. But every once in a while, we get these big grindy moves up. Again, it's the month of July. Every once in a while, what happens is we'll pop lower and start grinding down. These grinders are a really, really big clue. Just like we grinded higher today, we may grind down. Now, you know this already if you're a student with me, a member with me in the trade room each morning, right? But if you're not though, grinding markets are very difficult to stop. And oftentimes we'll get a bunch of these two-try bear traps that don't go anywhere. So if we start seeing this thing slowly grind down below that moving average, right? It'll hold below that moving average slowly, right? The key is a lot of times it'll be a sharp pullback. The sharp ones are the best ones, right? The sharp ones are great. Sharp move down, bears once, bears twice, back up again. Remember, the best entries are the scariest. They always are. They're uncomfortable, right? So I want to get a nice sharp pullback, right? Or a one sharp pullback, right? Okay. If we start grinding down, what happens is that grinding momentum, it's going to want to go above a prior swing and retest that low before we resume the overall trend, okay? Remember this. If it grinds down slowly, you will see bears aggressively start to short above prior swings, and their goal will be to at least go back and retest that low. Oftentimes, it's a two-legged move, okay? So if we understand that basic principle, if it grinds down, not a sharp move lower. Sharp moves are easier. It's kind of counterintuitive, right? You would think a slow move down is easier, but yeah, welcome to day trading, right? Whatever seems easier is never the easier way to do it. They love punishing us as traders. So grinding down above prior swings, retest that area. So how do we trade it now? We trade it by looking for that technical bear trap. It grinds, 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 grinds. If we understand that the sellers are going to try to short this thing above that high, I need to be in the profit on that trade before we get there. What that means is I'm looking for now that technical bear trap. I do not, in a grinding market, want to buy above a high like that, right? Again, if it shoots lower, yes, right? But if it grinds down, it'll drag all the moving averages down with it. Again, my goal will be that technical bear trap. I want to be in underneath that low. And knowing that, I have to be aware of those kind of bull traps above the highs here. I will take a very quick first target. I will get rid of that risk, and who knows, maybe we can get that big run back up again. We'll use that pendulum swing off of that channel, right? But the goal though is, if it grinds down, the entries are a technical bear trap. I want to be in under prior swings. And again, I will take a quick first target, get rid of the risk here, and hopefully it rips here and runs. But don't be surprised though. Don't be surprised though. If it pops up, it holds one of these highs up here, we get our one-to-one paycheck, and it makes that next leg going lower. Now, this one is the easy one, because usually this one is kind of like a blow-off bottom, all right? Whenever markets grind down, there's always one last little blow-off, right? It's scary, right? It seems like it's never going to stop, right? The best ones here, you're going to know, it's like a lot of things in life, right? It's tough to describe, but you'll know it when you see it. This leg down is oftentimes very, very strong. When you see the blow off, that's when you know, okay, now I can get more aggressive on this. Now, when I say aggressive, I'm not picking bottoms on this, right? What I'll do is wait now for that moving average to come in, and that kind of like the retest trade, right? Kind of like that double bottom retest trade. Once they retest that low, at least retest that low, and again, sometimes it's all the way a measured move, be aware of that. But once you see the blow off move, trust me, you'll know when you see it, right? It'll blow off going lower. That voice in your head will say, oh my goodness, I can't sell now. I can't buy now. Yes, you have to, right? You have to. As it pulls back now, bears once, bears twice. I know now, I know where the bottom is. I know the sellers who sold up here, they're buying their way out down here. Now it's that two-try bear trap, classic bear trap, and we look to add to our winners. All right, so the curveball tomorrow. Don't say I didn't warn you about this, all right? This is the curveball. It happens every once in a while, and the middle of July is the perfect time for this for tomorrow. So it's a technical bear trap. It's slow, right? It's grinding down. Technical bear trap. Quick first target, get rid of that risk and leave the runner. And again, you will know this when you see it. It'll just rip, right? It'll be blow off bottom, right? Blow off going lower. That will tell you right away right there. Now you know it's time to get more serious about buying the retest, buying that two-legged move going lower, bear trap, add on. And if you do one thing tomorrow, if we get that blow off bottom like that, leave that runner. That runner can be an easy paycheck. Like today, right? Look over here, right? It grinds up, grinds up, grinds up, and then blow off, right? It separates. That blow off is almost always the end of that grinding move. Now you know my 3 favorite entry tactics for tomorrow. What do you think, by the way? Am I crazy on that blow off? What's your game plan for tomorrow? Hit me in the comment section below. I would love to know your feedback. If you're loving the videos, hating the videos, always love hearing from you guys in the comment section below. That's the game plan, though, for tomorrow. Speaking of tomorrow, final day of the week. The place to be is in our trade room. Guys, the easiest way to start making money in these markets is to learn and trade along at the opening bell every morning. As always, start first with that free video course linked up in the description of the video below. Then come join us, come trade with us, the trade room, and we'll do it together. In the meantime, guys, hope you learned a bunch tonight. Hope you use this knowledge to make a killing on Friday morning. Be well out there, be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.